Guys, I swear, I don't know how this happened. I swear I had a different video in mind that was going to come out this week. But I just had to put my 2 cents in on this huge news topic. This is something that a bunch of us were expecting, and I guess a bunch of other people really weren't. Now, Tesla reported earnings on the 22nd, and from my TOS, it says that the estimated earnings per share was negative $2.35 per share. And their actual was actually a positive $2.18 per share. And what this means is that they have reported 4 consecutive quarters of positive earnings. Also means since their market cap is $287 billion, where the requirement is only $8.2 billion, I believe, and they've been positive for a year, along with other reasons, Tesla is now eligible to join the S&P 500. We're going to jump into why that is such huge news. We're going to take a deep dive analysis into Tesla as a whole company, and then we're going to wrap up with my thoughts around Tesla moving forward. Welcome back, everyone, or if you're new here, my name is Sean Lucas, and today's video will be covering Tesla again. Now, I know I've made a bunch of videos over Tesla in the past, and that's just because it's an important time for the company right now, and their CEO is always in the headlines, so it's a good mixture. But today's video will not only cover Tesla as a car company, but a tech company and a energy company as well, as I think that part of their business is widely overlooked. Now, if you are a frequent viewer of my videos, you already know the deal, but for the new people, generally in these videos, I look at the company's background, the CEO's background, what their products are, what it looks like on a chart, and we look a little bit into the financials, and then I wrap up with saying whether I think Tesla would be a buy in my eyes. Obviously not yours, because you should go see a financial advisor. But before we get into all of that, I just wanted to say, if you haven't checked it out already, I made a video earlier this week that went up on Wednesday explaining sort of a new series that I'll be doing with this channel. I will be going from 1 video per week to a whole whopping 2 videos per week, so it should be pretty special. Go check it out, show it some love, and now that we got that out of the way, let's get into it. Now, I will try to make the first 2 segments of this video short and sweet because for the most part, we do know the background of Tesla and Elon. So for that matter, I will try to make those 2 segments into 1. Now, Tesla began all the way back in 2003, and about a year later is when Elon got involved. Now, Elon gave Tesla about $6.5 million for their Series A funding, which totaled around $7.5 million. Now, this is exactly when he became a chairman of the board of directors as well. Now, when Musk took a more active role with the company, he was assigned to look over the production of the initial Roadster. Now, something that I thought was cool early on with Tesla is that they had a 3-tiered system/strategy. The first tier was actually their top-end Roadster. The second tier was a more affordable $60,000 sedan, and then the last third tier was a even more affordable $30,000 sedan. Now, this is all because the original founders wanted to build hype around the company, showing that they could be a top-end product. But to do that, they had to build a fan base. This is all because of the original founders' ideas around the company was to create effective electric cars and sell them to the masses. Now, fun fact about the Tesla Roadster that was shot into space by SpaceX, it was originally purchased by Elon Musk back in 2009. Now, since Elon was working closely with the Roadster, this means that he wasn't really working with the day-to-day operations of Tesla at this time. Now, this basically means that during this part of the story, this part of the background, Elon Musk isn't really the guy we all know and love today yet. Now, during the 3rd funding round is where I started getting interested. The investors at this time consisted of people like Sergey Brin and Larry Page, the Google co-founders, and Jeff Skoll, a former eBay president. Now, the 3rd round of funding raised about $40 million, where the 4th round of funding raised about $45 million. Not even to mention the private financing that helped raise the total amount up to $105 million. Now, the reason why I got so excited, or I guess this is where when I was doing the research, I was like, oh man, this is where it all started turning around, is that the investors of people like Larry Page and Sergey Brin and Jeff Skoll, intelligent people that at this time they realized that there's something special about Tesla. Now, during this time between 2003 and 2007, Eberhard was serving as the CEO up until the board of directors asked him to stepped down. Now, Eberhard's reaction to this was pretty much in shock. He said there was not even time for him to defend himself, nor was there any time of the board of directors to actually clarify their reasoning on this decision. At the end of the day, Eberhard said that he felt stranded, and they ended up giving him the role of president of technology, but obviously that wasn't enough for him, and he ended up leaving in 2008. For the CEO aspect of this whole thing, between Eberhard and Elon, there was a few interim CEOs, but I'm not going to bore you with all that because that's just going to take some time. Now, Elon succeeded the CEO at the time during October of 2008, where he started by firing 25% of the workforce. Elon started so drastically because during this time the burn rate was said to be outrageously high. Burn rate is a term used for startups during certain funding rounds for venture capitalists to find out how much money they are actually burning through before generating any type of profit. And let me tell you, I am glad that something that I learned from one of my COVID-affected classes has finally paid off. I took a funding new and growing ventures class, and that is actually one of the things I learned from that class. Now, during this time, there was a website that was created to basically mock Tesla and Elon at the time, saying that they were going to go bankrupt. And the name of the website is actually pretty funny. It was called the Tesla Death Watch. And if we know anything about Elon at all, is that he loves to prove haters wrong. Now, in May of 2009, Germany's Daimler AG took a 10% or less than 10% stake in Tesla for about $50 million. And this was stated by Elon to actually save Tesla from going bankrupt. Tesla ended up going public on June 29th of 2010 for about $17 a share. And the rest is history. Now, moving on to their products. I will not be covering their products as just cars in this video, because I've done that way too many times. So if you want to just learn about their cars as cars in general, or cars versus and compared to another EV company, then click on this video right here, and that video will do a pretty good job explaining their cars as just cars in general. In this video right here, I'll be looking at their cars as more as a tech standpoint, along with their gigafactories and solar panels and solar roof and the Powerwall. Now, the reason I want to talk about Tesla as more of a tech company is because one of my good buddies here on the platform made an awesome point in one of his last videos. I'm talking about my friend, the Market Scraper. In that video, he talked about how different companies were being compared to one another and how their stock prices would be affected and related. If one went up and the other one would follow. If one went down, the other one would follow. And this led to the notion that Tesla really shouldn't be considered in the same conversation as Ford or GM anymore, and more considered into the tech region. And I gotta say, I completely agree. Yes, they sell cars, but that's just how you get your foot in the door to get to Tesla's specialties, the tech. They have innovative technology that is literally changing the way people view driving. And quick side note, I know people bash them on their autonomous driving not being completely perfect yet, and I guess that sort of makes them feel unsafe. But one of the examples that I heard was that the Tesla's sensors didn't pick up a semi that had rolled over on the highway. And my response to that is good. Any story that I've either read myself or somebody's told me that reflected Tesla in a negative light regarding the autonomous driving could have been easily resolved if people used the autonomous driving feature correctly. Now, the autonomous driving that the car does for you right now, the one that is currently available for the public, is meant to be helpful, not really take over the full load of driving. And if something was to happen in front of you, like maybe a car crashing or a sensor didn't pick up the light switching colors, then the human driving the car would be able to, step in and take control of the driving vehicle. The version that is out there for the public right now was never meant for a set and sleep situation. And the more people that drive them and set the autonomous driving feature on, the more data that Tesla can collect, and ultimately the better that it will be for the future. And by the looks of it, it doesn't seem like it's that far away. Now, the semi-autonomous driving feature is really cool and all, but Tesla really couldn't stick to the original founder's plans if the cost of the vehicles remained too high. And that's where the gigafactories and solar roofs and solar panels come into play. Now on to gigafactories. The gigafactory was a plan that was brought into fruition to help make electricity that goes into the ion batteries cheaper than your everyday gas-powered cars. And this is so it would be more affordable and more attractive for the masses. Now, another cool thing about gigafactories is something I actually saw on a documentary called Before the Flood. I'm not sure if it's still on Netflix, but if it is, go ahead and watch that. It's a great documentary. It's a documentary that was made around Leonardo DiCaprio during the time he was filming The Revenant. During this time, he was also named the United Nations Messenger of Peace. Basically, it was a documentary about climate change and the dangers of it, and why am I telling you this? Well, actually, a big part of that film took place at a gigafactory where Elon explained to Leo the benefits of what a Gigafactory is. A direct quote from Elon says that the sun doesn't shine all the time, so we have to store it. Another major thing that is said during this film is that it only takes 100 gigafactories to power the whole world. Yeah, that's right, the whole world. Not just the US, not just North America, not just Europe and Asia, everything. And by doing this, we could really help out developing nations because sun is a resource that is everywhere. Anyways, there's currently 3 gigafactories, I believe. There's one in Sparks, Nevada, one in Buffalo, New York, one in Shanghai, China, one I believe that is starting in Berlin, and now we have one that is starting in Austin, Texas. Now, moving on to the solar panels and the solar roof, now it kind of seems like common sense, but you know, in the grand scheme of things, I just think it's a genius move by Tesla. Now, I really think this product is perfect for someone who lives in an area where if it rains slightly, the power goes out, like my house, or if it's really hot in like numerous places in Texas, Arizona, Nevada, places like that, where everybody around you is using AC on the max setting, and sometimes the power cuts out. The solar roof or the panels itself collects the electricity and stores it in the power wall for rainy days. And the Tesla app allows you to decide when and where to delegate the electricity that you have stored. Whether that be charging the power wall, charging your car, or using the electricity to power your house. And this really gets you one step closer to being off the grid, which is cool for people that live in less dense areas where there's only one electricity provider and they're kind of running a monopoly. Having the solar powers from Tesla or the solar roof or really any solar energy at all get you one step closer or one step further away from the monopoly. Now, personally, if I was going to do this, I think I'd have to go the route of the solar roof itself. I think it looks pretty slick. And I mean, the Tesla really thought the plans out for this pretty well. I mean, each tile themselves has a 25-year warranty. Each power supply in each tile has a 25-year warranty, and then there's an additional weatherized 25-year warranty to go along with it. We all know what has been happening with the stock price of Tesla as of recently, and if you watch Graham Stephan, you know because he said that the stock's price reacts more to the hype of being inducted into the S&P 500 rather than actually being inducted into the S&P 500. And by looking at the action right here, I would say the chart is telling the same story. But let's check a few things first. So the low for the last 5 years is 141.05. And the high, obviously, just came recently at 1794.99. Okay, well, let's check the low for the last 3 years. Okay, so we'll go 3 years. Okay, the low for the last 3 years was 176.99, and high is still the same. Okay, well, let's check the last year. 1 year, 1 day. Okay, so the low for the last year was 211. So the surge in growth has been very recent. I mean, as you can tell. And honestly, the volume profile suggests that there's a price shelf from the 714.09 to about $838 dollar price range. And there's a new price shelf being forming at the new all-time highs. But in the middle, you can see this little pocket that's forming here, and that's the volume pocket that I've talked about in previous videos, or what I like to call no man's land. As you can see here, there's a couple gap ups, and if it was to ever break this support right here at 1371, I would not be surprised to see it falling back into the 714 to 857 range over here. And I don't think that's an outrageous statement. I think we would all pretty much agree with that. Looking further into it, you can see the MACD. Okay, let's just zoom in a little bit. You can see that the MACD lines have inverted, suggesting that they're more on the selling side rather than the growing side. And you can back up that statement by seeing the first red bar right here. So honestly, just judging by the chart right now, it does look a little weak, but honestly every chart looks a little weak when it's at its all-time highs, and especially being up 571% in less than a year from its low. So take it with a grain of salt. Now, let's start looking into the financials, and more specifically, the Q2 earnings. Just comparing Q1 to Q2, you can see that the total revenues for Q2 2020 is about $6.03 billion compared to Q1 of 2020, where it was $5.98 billion. And compare that to Q2 of 2019, where there was no pandemic, remember, that was $6.35 billion. Now, to analyze that a little bit for myself, it was kind of surprising to see an increase of revenue from Q1 to Q2. Not super surprising to see that Q2 of 2019 was still higher than Q2 of 2020, but impressive that Q2 of 2020 didn't take a bigger hit. Now, looking at total gross profit for Q2 of 2020, it was about $1.26 billion, and compare that to Q1 of 2020, which was $1.23 billion, and compare that to Q2 of 2019, of just $921 million. So again, another thing that surprised me was not only an increase from Q1 to Q2 in 2020, but also a pretty dramatic increase from Q2 of 2019 to Q2 2020. And even looking at their operating expenses, it's nice to see that it is lower than a year ago, and it looks like they're gradually decreasing it over the quarters. But a big thing for me is the free cash flows. They have cash left over at the end of the quarter, meaning that they didn't spend everything they had to absolutely have a positive earnings per share and to sneak their way into the S&P 500. They had about 418 million left into the tank. And these next two things are just a few things that they wrote down on their Q2 earnings report. Profitability. Our operating profit improved in Q2 despite challenging circumstances. Positive impacts include lower operating costs due to a temporary reduction in employee compensation expense, a sequential increase in regulatory credit revenue and deferred revenue recognition of 48 million related to a full self-driving feature release. These positive contributions were offset by significant costs related to the factory shutdowns, as well as sequential increase in non-cash SBC expense primarily attributable to 101 million related to 2018 CEO award milestones. While ASPs declined sequentially, improvements in product and manufacturing costs driven by the Model Y and China-made Model 3 and improved aftermarket software and connectivity revenue made a positive impact on our profitability. Now for their cash, they stated, quarter-end cash and cash equivalents increased by 535 million quarter over quarter to 8.6 billion. Driven mainly by free cash flows of 418 million. Free cash flows was negatively impacted by a higher percentage of deliveries occurring towards the end of the quarter compared to prior quarters, as well as an increase in government rebates and regulatory credit receivables, which are paid in accordance with their payment terms. Since vehicle production resumed in Fremont and Nevada in early May, our delays payable outstanding was not impacted as much as initially anticipated. Of course, all this data that we are seeing and analyzing right now is unaudited, so it may not be completely accurate, but I'm willing to bet that it would be, considering that if they ended up going positive earning per share wise, that they would most likely be looked into before being, inducted into the S&P 500. And one last thing that I want to touch over here is that, you could see in the cash section that they talked about tax credits that they got from the federal government. And a lot of people didn't like this because if Tesla didn't really get those tax credits, then they would have been, negative a couple $100 million this quarter. But they did. They got the tax credits, and they were able to have a positive earnings per share this quarter. And it left a nasty taste in some of the investors, inside their mouths, and you can see that with the price fluctuation at their all-time highs right now. So now we are at the point where I give a statement on whether or not I think Tesla is a buy in my eyes. Obviously not yours, because you should see a financial advisor. Well, honestly, after looking at the company in a pretty deep analysis, but definitely not the deepest, I feel like I have a good understanding of where the company is at right now and where they plan to go in the near future, and at least, for the next quarter. Okay, so just naming a couple things that I like about this company. It's the first major, solution to gas-powered engines, because, that's an issue that we need to start tackling as soon as possible, and it's an issue that I think Elon is pretty passionate about. I like that the products that they have made, they built products around it to start helping it. The cars need electricity. Where do they get electricity from? They get it from the power wall. Where's the power wall get electricity from? Well, it gets it from either the solar panels or the solar roof. And without a doubt, I feel like I could own a couple of their products within the near future. And really, it's not like an if anymore, it's a when. Now, Elon and Tesla have said this over and over and over again, that their intentions are to be affordable for the masses to buy, to not go bankrupt, because if they went bankrupt, then this awesome solution for internal combustion engines would have been for nothing. And the main focus is that it's good for the environment. If you would have listened to the Q2 earnings for Tesla, you would have heard Elon say that he thinks the cars aren't affordable enough. So we should really see the prices of all their products start coming down in the near future. All that other analysis stuff is fine and dandy. But what it comes down to is the stock price that it will either earn or burn the casual investor. And it's a huge topic right now. Is the stock overvalued? Is it going to crash? Is it going to keep going up forever and ever and ever? And all I got to say to that is that people thought the stock was overvalued at 300. Then when it hit 900 in February, people thought it was a fluke, and then it would never hit 900 again. And now we're at the mid 1500 range, and I'm beginning to think that the people were right. Tesla stock may never hit 900 ever again.
15, 20 years down the road, buying in at 900 would be a luxury. Oh, I'd love to buy a Tesla at 900. Because I've seen on the internet that projections of the company's stock price is going to be anywhere between 3,000. I've seen crazy things as of 15,000. I don't know. I'm not a fortune teller. I'm just.
So this is editing Sean now, but I mean, that video came out in February. That's pretty crazy that I was talking about buying Tesla at 900 being a luxury, thinking at I don't know. Just thought that was pretty crazy. I thought I'd show it. Well, guys, when writing this video, I could tell that it was going to be long. So if you made it to this part of the video, I appreciate you very, very much. But this is where I'm going to cut it off. I could probably talk about Tesla all day and all night. So I got to start editing this video sometime. That is going to be it from me, guys. So until next time, remember to like, comment, and subscribe. And I will see you guys on the next one. Peace.